Good afternoon, Boomers. Brian Tong here from Boomerlife. Hope everybody's happy and healthy. It is October 20th, lovely afternoon here in Florida. Sun is out. It's 80 degrees. Fall weather, typical. No leaves changing here. So I started writing a blog about AARP. What is it? Is it worth it? Is it a scam? Is it something that we all need? And obviously, AARP is the American Association of Retired People. We've all heard of it. But they have health insurance offers that were intriguing to me. So I wanted to look into it and do a blog on it. AARP only costs $12 a year for the first year membership. I went ahead and bought one. You can also buy one for 3 and 5 years. So it's practically free. And then you get lots of discounts in places like movie theaters, museums, restaurants, car rental, travel, and on and on. But today I just want to talk about their health insurance plans. So they first of all, they have life insurance through New York Life, which is a great company. And it goes from, you can buy policies from 10,000 to 100,000. Premiums start at $11 a month. If you're 50, then they go up from there, obviously. But these are benefit term life policies with no saving or surrender value. So I'm not a real fan of these. But then they also have long-term care insurance. And with Americans living longer than ever, most of us will need some extra help with everyday activities as we age. The benefits of long-term care insurance go beyond what your health insurance may cover by reimbursing you for services needed to help you maintain your lifestyle if age, illness, injury, or cognitive impairment makes it a challenge to take care of yourself. This could benefit families who want to protect their loved ones' lifestyle and assets, retirees and pre-retirees, or individuals. The AARP has relationships with many insurers. For long-term care, it's, again, New York Life, a highly rated A++ company. And that is in light of the fact that 70% of people turning 65 can expect to need some form of long-term care in their lifetime. And 90% of those who receive long-term care live in their home or in a community setting. So it's impossible to predict your chances of needing long-term care or how long you may need it. Since the cost of care can be expensive, it's important to understand the financial impact a few years of long-term care can have. So nursing home care, how much does it cost? Averages $107,000 in a private Medicare certified long-term nursing home room. That's $107,000 a year. Most people can't afford that. The average in-home care costs $51,000 a year for 40 hours of help per week. And assisted living, a one-bedroom assisted living care facility averages $57,000 for a year. So as you can see, it's pretty expensive. New York Life has many coverage options available. For example, a long-term care insurance policy could cost around $89 a month for a single 50-year-old female and $106 a month for a married couple age 50, for $3,000 a month in coverage with a maximum of $100,000. So it might be worth looking into. Now, there's other healthcare insurance that you can get through AARP. They have dental insurance with Delta Dental Insurance Company, optical with My Vision Care provided by iMed, and short-term health insurance with Medico. But most Americans are not interested in basic health coverage or whether or not they need a supplement. But what is a supplement? It's not just a vitamin. How about this? Get yourself in shape so you don't need all this insurance. That's what my wife tells me. So I put some links in the blog to get you a stationary bike and a treadmill. Just an idea, just saying. So Medicare supplements, what are they? When you reach 65, you become eligible for Medicare insurance parts A, B, C, and D. The problem is they don't cover everything. So Medicare supplements are there to supplement what you get for Medicare. And if you buy it through AARP, it's going to be with United Healthcare to help cover out-of-pocket expenses, copays, and deductibles. So why do you need it? Well, this was all news to me. Part A of Medicare is hospital insurance. It has no monthly premium if you have over 10 years of history of paying into it. If you don't qualify with 10 years of history, you can still pay into it with a monthly premium, and they're not that high. Part B helps cover medical costs, non-hospital related. And everybody pays a premium for Part B. The amount you pay depends on your income. Higher income pays higher premiums. Legal residents who are 65 and older are all eligible for Medicare if they've lived in the U.S. for more than 5 years in a row. So Part A pays for hospital and facility costs. This includes stuff like a hospital room, meals, nursing care. It can also help cover the cost of hospice, home health care, and skilled nursing facilities. Just keep in mind that Medicare does not usually pay the full cost of your care, and you'll likely be responsible for some portion of cost sharing, deductibles, coinsurance, copayments for Medicare covered services. Most people do not pay a monthly Part A premium because they have their equivalent of 10 years history. In 2021, if you had less than 30 quarters, 40 quarters being 10 years, of covered employment, your premium was $471 a month. If you had 30 to 39 quarters, it was $259 a month. Like I said, most 65-year-old Americans get Part A premium free because they have a qualifying work history. On top of that, though, you pay a $1,364 deductible for each benefit period. And a benefit period begins with a qualifying hospital admission and ends after you've gone 60 days without a hospital or skilled nursing home stay, 60 days after you get out. The downside is that under that, you could pay the deductible more than once in a year. Go in the hospital, get out for more than 60 days, then go back. You're going to pay that $1,364 twice. Now, Part B helps pay for medical costs of doctor visits, outpatient procedures, preventative care like flu shots, chiropractic therapy, x-rays, lab tests, and select prescription drugs. In 2021, the Part B premium is $148.50 a month, and it goes up for individuals with an annual income of over $88,000. Part A and B together are called original medical care, and they're run by the federal government. Part C helps pay for hospital and Medicare costs plus more. It's only available through private health insurance companies. They're called Medicare Advantage plans. They cover everything Parts A and B covers plus more. They usually cover more of the costs you'd have to pay out of pocket with Medicare Parts A and B. Part C puts a limit on what you pay out of pocket in a given year. Some of these plans also covered preventative dental, vision, hearing, etc. Original Medicare does not. So the Medicare Advantage got its start in 95. The federal government created it as a way to give people more options. Private companies sell it, and the federal government regulates them. So how is it different from original Medicare? I put a chart here in the blog that shows you the basic difference. There's an out-of-pocket maximum each year. Once you hit a certain dollar amount, your plan pays 100% of the cost over for most services it covers. So that's good. It also covers emergency care when you're out of the country. So if you travel a lot, something good to look into. With original Medicare, you pay 20% of the cost of every procedure, or 20% co-insurance for common health services like office visits and outpatient surgery. Most Medicare Advantage plans use copays instead of co-insurance for these services. That means you pay a fixed cost. For example, your Medicare Advantage plan might have a $15 copay when you see a doctor. That means you'll pay $15 every time you see the doctor, no matter how much the visit costs your health insurance company. If you have original medical care, you're going to pay 20% of the total cost of the visit. So if the visit costs $200, you're paying $40 instead of $15. With original medical care, you go to any doctor or facility that accepts Medicare. Medicare Advantage plans have fixed networks of doctors and hospitals. Your plan will have rules about whether or not you can get care outside the network, but with any plan, you'll pay more for care you get outside the network. Medicare Part D is prescription drug coverage. This is the part of Medicare that provides outpatient drug coverage. It's provided only through private insurance companies that have contracts with the federal government. It is never provided directly by the government, unlike original Medicare. If you want to get Part D coverage, you have to choose and enroll in a private Medicare prescription drug plan, or PDP, or a Medicare Advantage plan with drug coverage, an MAPD. Enrollment is optional, though recommended to avoid incurring penalties and only allowed during the approved enrollment period. Typically, you should sign up for Part D when you first become eligible to enroll in Medicare. Whether you should sign up for a Medicare Part D plan depends on your circumstances. If you have a credible drug coverage from an employer or retiree insurance, then you won't need it. Also, some people already enrolled in certain low-income assistance programs may be automatically enrolled in a Medicare drug plan and receive additional financial assistance paying for their medicines. So, Medicare supplement plans are health insurance policies that offer standardized benefits to work with original Medicare, not with Medicare Advantage. They are sold by private insurance companies. If you have a supplement plan, it pays part or all of the certain remaining costs after original Medicare pays first. These plans may cover outstanding deductibles, coinsurance, and copayments, and may also cover healthcare costs that Medicare does not cover at all, like care received when traveling abroad. Remember, Medicare supplement plans only work with original Medicare. If you have a Medicare Advantage plan, you can't buy a Medicare supplement plan. AARP offers members 8 Medicare supplement plans through United Healthcare. These allow you to choose any doctor or hospital that accepts Medicare, visit any specialist that accepts Medicare with or without a referral, and use Medicare anywhere in the U.S. when you travel. Obviously, premium costs will vary by state and by coverage chosen. In states with this pricing structure, the average monthly cost for the AARP Medigap Plan G is $124 per month, someone who is 65 or older. And then at the age 75, it goes up to $199. So after reading all this, I recommend the Medicare supplement through AARP. I've given you a bunch of breakdown of the costs. And it varies depending on state, so I'm not going to go through all that. But they've gotten fairly good customer satisfaction reviews, and it's certainly worth looking into. So that's all I have for now, Boomers. Have a great day, and we'll see you on the flip. Brian Tong, Boomerlife out.